All right. Good afternoon, everybody. I think we'll probably see some more people trickling in from the afternoon session. Thank you all so much for the great participation, for coming back. We are the last gap between happy hour and networking. The bar is getting set up outside. And I just want to take a moment. I am so appreciative of everybody from around the college coming to participate and spend time together today. And this is going to be the catalyst for a lot of really positive change here in the College of Engineering. So for our last keynote this afternoon, I'm very honored to welcome Radhika Venkatraman, the Senior Managing Director at Cerberus Capital Management, and proud NC State alumna. Radhika is renowned for her experience in Gen AI and AI-related governance. She's been named among American Baker's 25 most powerful women in finance. She received the Women in Finance Award for Excellence in Leadership, and she's been featured in Computer World Premier 100 Technology Leaders. She holds a master's in computer science and computer-aided engineering from NC State and a bachelor's degree from IIT Bombay. Radhika, please join us at the podium.
Thank you so much, and it's really a privilege and honor to address such distinguished faculty here. I never imagined I was going to come and talk to any of you. I'm only used to being on the other side, listening to all of you. So what I'll try to do today is talk about some of the big challenges that I see in enterprise, and enterprise also extends a little bit to government. And I'm just going to tee it up more as challenges, not really any solution, and everything is going to be with the lens of an investor, because that's kind of what I do these days, kind of try to find where can you put money, where your money can double or triple in a few years. And so that's sort of the theme for the talk. So what is it that what is it that we're really going to talk about today from an AI perspective? So I am not going to talk about software, hardware, any of that, but let's see what it is that November 30th of 2022 did. So we had like ChatGPT come online, and then all of a sudden, if you didn't have the word AI in your vocabulary, your board got upset with you, your CEOs got upset with you. Everybody in the government decided that there would be 37 different agencies with chief AI officer. Regardless of what their role was going to be, they were all going to AI something or another. So with that as the backdrop, I thought I'll show one chart that McKinsey put together. Now, McKinsey's been upping their estimate on the number of trillions that the GDP is going to increase by, and every year it's sort of growing by a few trillions. But even if you cut it all in half, the potential impact of AI on the economy is supposed to be about 25 trillion divided by 2, at least 12. So, I mean, that's a very, very, very sizable number. But when you think about that big a number, and where are the two big areas coming from? One is everybody says AI will change the world. Nobody knows what that is, but it'll change the world, and that'll change it by about 3 or 4 trillion. But more importantly, we talk about productivity, and I've heard numbers like 45% of the developers are not needed, 60% of the lawyers are not needed, and like just this morning, somebody said, if you are not building or servicing something related to AI, you might as well go home. So I don't know if that is true or false, but be that as it may, that's supposed to be like the starting point of why we're having everything else happen. So now when you think about industries that absolutely have no choice but to start running. So you have the hyperscalers, you have the software as a service companies, and then you have technology-based system integrators. For these three industry groups, if one of them does not do something, the others are going to do it. So when Microsoft got started and Google was like the Google CEO was using the word AI about 40 times per minute on his earnings call, Amazon couldn't stay behind for too long. So it's sort of that race going on with the hyperscalers. And if, Salesforce does not do it, somebody else, SAP will do it. And if Accenture does not do it, Deloitte will do it. And so I can sort of understand why those industries will just have to run, regardless of what the ROI is. They're just running. But they're not running at just some pace. They're running at the pace of investment of $1 trillion in the economy in about 5 years, right? Just this year alone, they're spending about $250 billion, which is 2 times what the top 3 telecoms have ever spent over a 3-year period. which is double of what oil and gas has spent at its peak of investment. We're talking 250 billion. But underlying all of this is actually the LLM technology. And LLM is nothing but an infrastructure hog at this point in time. So what really needs to be true for this infrastructure? So you need something that is scalable, affordable, and without that, there is really no AI. So now I just wanted to throw an eye chart over here. For some of you, it may be a familiar topic, but for those who are not familiar, I'll at least walk through what it's saying. So when you think about any IT infrastructure of, let's say, a top 100 company, about $5 trillion go into data centers today. 17% of that goes to the cloud, 85, 86, 87, however you calculate it, goes to the cloud providers. And generally, in all these data centers, you put CPUs in them. It could be Intel, it could be AMD, it didn't matter, but it was generally CPU. The top chart shows there is a 7x growth in GPU. That's what the top chart is saying over the next few years. Then the chart to the next on the northeast quadrant is basically saying you take those GPUs and how is that distribution? So it's going into the hyperscalers, it's going into tier 2 clouds, and it is going to small co-locations, wherever you may be. Every group is buying GPUs. People are buying GPUs almost as a collateralized asset, like they would buy gold or some other commodity. So that's sort of how GPUs are being bought. The bottom two charts are basically saying the left southwest quadrant is basically saying you're buying GPUs for training and you're buying GPUs for inference. There's new chips coming, but nonetheless, inference will soon start tipping and will, overwhelm even what's happening in the training world, and we haven't finished talking about the training story yet. And then this particular chart on the right-hand side says, we're going to double the CapEx spend for data centers. Now, I'll show you another chart which shows it'll triple. I don't know if it's going to double or triple, but it's a lot of money that is just being spent from an enterprise perspective. And this sort of AI spend for IT infrastructure, I just want to put this in perspective again with some other numbers, right? GPUs take 3 to 4 times the power of CPU. And if you think about large companies like Verizon, the biggest data center they have is 5 megawatts of power. That's the biggest they have. But there's like one like that. Most average data centers, there's about 5,000 data centers around US. Average power is about 1.5, maybe 2 megawatts. Now, if you take like just a 1,000 cluster GPU, it takes about 1.67 megawatts of power. And then, of course, nobody runs at 100% efficiency. If you run it at at a PUE of 1.2 or 2.5, that's one of the best in class. You really cannot run it in your standard data centers at all. So if you take a 4-node big cluster, 4,096 GPUs, it takes at least 6 megawatts of power. And that costs at least about $10, $11 million on an average based on air cooling and so on. And so when you compare it to what it does to your current infrastructure, and on top of that, you're going to have to basically use about 690, 700 liters of water per hour and about 60 plus thousand square foot of space. And just to enable this, you have about 100 plus miles of fiber. And if you think of all the patch panels and everything on the back of everything, you're talking about 12,000 or so connections that have to be made to just enable this infrastructure. The last I read a stat was Azure uses, basically Azure Cloud by Microsoft, has like a 29,000 mile InfiniBand cable going across its big mega data centers. That's like enough fiber to sort of circle the globe. So we're talking about that magnitude of infrastructure change that has to be made for every corporation to really embrace generative AI at scale. And on the right, you just see the power consumption, not just in the US, but around the world. I don't think you need to read the numbers, but suffices to say that, it's sort of a hockey stick. So this sort of a surge in demand in AI data center is now starting to put tremendous pressure on the supply chain itself. So the story of AI, which was all about LLM became a commodity faster than anybody thought it would, and very soon pivoted to becoming story of compute. And then the story of compute became a story of power. And now it's about like power, energy grid, land grab. And so, now you see any data center that's out there, it's running at historically low vacancy rates, like 98% occupancy. Who's ever seen that before? The expectation of power is basically 15% year over year growth, 38% overall grid capacity increase. I mean, this is more pressure on the grid than anybody has ever seen historically in many, many decades. And power on an average in the US is anywhere from 8 to 10 cents per kilowatt per hour. But if you think about other parts of the world, like Europe, it's north of 20 cents. And, you know, Bitcoin miners were able to get it cheaper because they were doing it only at night, but AI needs you to do it all through the day. So it's not cheap, and it's not cheap everywhere. And so you're talking about, the blue bar is basically saying that's the new incremental power to power these GPUs. So we're going to need double the power that we currently have in the data centers in 3 years. And these projects take a very long time to build. It takes 2 years to build data centers. It takes time to permit. It takes time to find land. It takes time to negotiate contracts, find power, upgrade grid, and so on. So what I thought I would do is just put together a set of questions that is on top of the mind of people who are building and operating these kind of infrastructure, right? So they're always asking the same question, and which is like, how much additional power you need, because it almost seems like you need more power before you even start consuming what you already have. How many GPUs? And we're not talking 1, 2, 8, 12 anymore. We're talking 1,000, 500,000, 100,000. So we're talking very large numbers. And there's a very long lead time. Today, if you order from NVIDIA, it's 9 months lead time if you're trying to buy a GPU. And then the question is, like, for any data center, like it's nobody wants their data to leave their sovereign nation. So everybody wants to build their own data centers. Everybody does not have power like the US does, but even US does not have power everywhere. So there are some states with more power than others because you want this as close to power as you can. And so the question is really around where is your data center progression in particular regions. So it's not just like a broad question. And every time you're talking about this, you're talking about generators, you're talking about transformers, you're talking about patch panels, you're talking about all the other content that go in there. The last I heard, generators were on 3-year backlog. So that's sort of like the pressure point you're seeing. You're talking gigawatts. I was speaking to another investor who's putting 380 megawatt power in Kenya and then building a data center there and taking the weights and biases from there via subsea cable into Europe and US. And the nation of Kenya does not use 375 megawatts of power. So we're talking about, crazy amounts. And then there is a big question, is AI going to kill the environment by doing all of these things? Just recently, if you all saw the press, you would have noticed Google got denied by Ireland, and another hyperscaler got denied by Amsterdam. Like the last time Meta put a data center in Phoenix, they were consuming 1.2 million gallons of water in that particular data center. And now they, of course, need to recycle that water and use it for some kind of farming. Otherwise, like, I don't know where you find water in a desert. And then, of course, the bigger and most important question is, how much CapEx do you need? How much CapEx do you have? And what's going on with the OpEx? So we talked about SaaS companies, hyperscaler, and very large, services companies needing to run. Now, if you're an infrastructure company, or if you're making chips, or you're making any of the supply chain of the chips, you also need to run. Because if you don't put the investment, you don't take that risk in that big investment, then somebody else will take that risk. It's sort of like the wireless game not so long ago. If you were a carrier and you didn't deploy the network, even if it costed you $20 billion, the next carrier that did it would grab the customer. So the supply chain providers of this infrastructure need to keep investing regardless of the ROI. So the only people who ask real ROI are people in enterprises who are not participating in AI right now. And they'll start forgetting about ROI the minute they have their own competition participating and figuring out a better way to do this. So, as an investor, what I see out there is it's a bit like an arms race, and the arms race is dominated by infrastructure. The VCs dominated the investments about 2 years ago. Very, very, very quickly, all of those software companies started pushing the price on LLM down. The valuations are astronomical. Most investors, at least large investors, have a tough time picking winners in that group of companies, if you will, that make software. Very, very hard to pick. Not to say that it's easy to pick in the infrastructure, but at least with infrastructure, there is this belief set that you're putting something tangible on the ground or in the air or under the ocean or wherever you're putting something. So as investors, we are constantly exploring where is power, where are new sources of energy, what cooling technology can we invest in, what cooling technologies don't need water or need less water. Is there somebody with a better relationship for GPU acquiring, and is there an alternative to GPU, although that seems not there yet. But on the inference side, we do make investments. There are half a dozen companies out there. There's a whole bunch of new AI clouds because the traditional hyperscalers are predominantly CPU based, and they're beginning to see that retrofitting is a very expensive proposition. We look for land close to energy. And just to put it in perspective, without giving any indication of the location, if land costed, let's say, $1 a square foot, as soon as you identify that there is power that is nearby and can be pulled into that land, the land price goes up like 3 or 4 times. And that's like in a matter of weeks or something, because there are people constantly searching for land where you can pull the power into. And the minute there is some cloud provider, I'm not even talking about the hyperscaler, that's interested in putting like a building there and constructing some data center like facility, that goes up another 4 or 5 times. So the $1 became already like, $20 in matter of months. And this is all without anything constructed. This is all just based on intent. So, I mean, it is a bit scary. It is a bit scary. And then, of course, with this kind of expense, everything becomes more like as a service, because that's the only thing that many people can afford. The infrastructure cost is not something that most can bear. And, I haven't even gone into the entire supply chain of the GPU fabrication and all of that, that people are hunting. But you can sort of, imagine from here all of the very many areas that an investor would be interested in, people are working on. And so innovation is happening at every level. It's not just software level. It is not just hardware optimization of that software. It is massive innovation from materials to power to clean energy to figuring out, if clean energy can be stored off the grid and can it be used. So there's energy storage innovation that's going on, new materials. Copper has become expensive again. It's cheaper to use copper than it is to use anything else in a data center. So on and so on. So I think, every part of the ecosystem that is participating in it is thinking about it differently, because we're talking about a build out that looks to be bigger than the scale of internet. And we're talking about numbers that are bigger than at least what I have seen in the many investment cycles over the past, 3 decades or so. And those who have invested for a very long time say that they haven't seen one like this, recently, kind of thing. And yesterday evening, you may have all seen Microsoft, BlackRock, and Mubadala signed a $30 billion investment fund for infrastructure of AI. And that's just the beginning, is what they say. They plan to take it to 100. And so, so these kinds of announcements happen every day, literally. And so the only thing I wanted to sort of leave everybody is, to think about, this infrastructure. And as you think about across the College of Engineering, what kind of changes do you have to make in every field that will affect something more balanced for society and environment and so on? Because this scale of build, this scale is quite unsustainable without something, that is cheaper, sustainable, and so on. We are not even talking about ethical AI, explainable AI, none of that stuff. But if I bring it back to the beginning, which is all this is on the hypothesis that there is 25 trillion of value to be created. If for whatever reason there is imbalance between supply and demand, meaning if you don't get the output that McKinsey said on the first chart that we would get, and we keep spending like this, the imbalance always causes something. Most people predict that there will be a soft fall, not a hard fall, but who knows? Who knows whose predictions are right? So I'll pause on that and take any questions you may have.
All right, floor is open for questions. We'll get you a mic.
Thank you so much. I'm riveted, and I think you already addressed this, but I just want to ask again. So when you study the railroad, you learn that some of the people that built the railroad were not the ones that benefited from the railroad. And in all of what you said, I'm trying to parse out, do you need to be the one that built the railroad because you're controlling the railroad in this case? Or are there people that are going to benefit, and some of these companies that are doing this heavy investment won't benefit as much as maybe some who can be users? So I'm just thinking about the control versus the benefit of this infrastructure. How important is it to control it?
Who is actually controlling? So the hyperscalers are able to control. The hyperscalers are able to control because they're throwing out so much cash today that no investor is particularly upset when they see like an NVIDIA making an investment or a Microsoft making an investment. Although NVIDIA makes a number of circular investments. They invest in a startup and then they supply GPU to the startup, and then they also invest in a data center that they put GPUs into. It's a bit circular, but they're still making real cash. Microsoft is making real cash. Google, Amazon, Facebook, Apple, the 5, 6 of them, they have like real money. And so they can afford to overbuild, and they can also afford to get it wrong. How much will their stock be affected if they get something wrong? I don't know. I cannot answer that. But at least they have very strong balance sheet and they have real money to go put out there. On the software side, there is astronomical valuation of very small companies, and their expectation is to sell to the enterprise. I'm not sitting in an enterprise right this minute, but 2 years ago I was in an enterprise. And when I think about how many would have come into my office at this juncture if I was in that role, it's just unbelievable. One of the things I coach the startup CEOs all the time is like, if 50 of you show up, remember that to the buyer, all the sellers sound the same. And so I don't know how they're going to make their money. And if they cannot make their money, then, there's a lot of people who have put money in these software companies, at least in the short term, are going to be very cash strapped. And, so you're going to see the investor get hurt. You're going to see the startups get hurt if enterprise does not start consuming it immediately. So at least there is that. Control is too hard to tell at this point in time. The only big controls I see are in the tariffs. The US has already prohibited NVIDIA from sending anything to China, but like the last FT article says, it's easier to get H100s in China than it is in the US. So go figure. It's hard to tell whether the tariffs are working or not. But this early in any technology life cycle to start with tariffs is also kind of unheard of. So I don't know. I don't have all the good answers for any of this.
Hi, so I'm trying to think of it from the other direction, from the user back to the upstream standing up of the system. Silly analogy, but I do remember when the rave, when smartphones came out, is that everybody could get their little, I'm gonna play my little guitar in the screen of my smartphone. And everybody had like a play app, right? And eventually they died off because it's like, well, I mean, it's kind of cute, but doesn't help me do anything, right? And so in that vein, I can imagine a future in which there is a possibility of essentially have, if not an instinctive understanding, at least a regulated understanding of what is AI worthy, right? Like, yes, we can use AI for everything, but do we need to use it for everything if there is so much knowledge? And I know, it kind of goes against the vein of like the power of AI, but it also brings to bear the impact of human knowledge that sometimes you don't need to survey the universe to find an answer. And that would impact the footprint, the environmental footprint, the type of demands that need to be done. So in that vein, what are the types of safeguards that one could think of in terms of operational expenses or capital expenses that could be self-imposed or put some like self-restraint before the government comes and does it, right?
Right. So in the enterprises that are not participating in either building the software or building the infrastructure, of course, their CFOs are basically asking for ROI. So if you look at consumer applications, like, if somebody writes, a joke for you in Shakespeare style, like, I don't know if you're going to pay money for it. A Google AI query is 30 times more expensive than a regular Google query. But if everybody keeps using the Google AI version of the query, can Google afford that? And can they afford to give it to everybody for free? I don't think so in the long term. In the short term, of course, they're just obviously wanting us to get used to the product. But enterprises are very careful. They're using it for marketing. Most companies have basically slashed their marketing budgets. There's single digit to max small double digit number of people doing marketing in Fortune 100 companies, okay? So they're using AI to actually extend their capabilities. Like there's one website in UK that uses only generative AI to show off all the clothes that they make. They actually make like sweaters. So instead of having like, I don't know, 100 different models and like 100 different sweater types, what they basically have is like you could just ask for like, male, female, black, white hair, gray hair, brown hair. You can basically describe whatever kind of person and whatever color sweater, and it'll generate a person and show you the sweater on that particular person. So it's a little bit different than always having like, a size 4 white woman or only a Hollywood style man, and then everybody else doesn't fit there, right? So these kinds of things, I think AI is already helping, and they're able to increase their sales and demonstrate significant progress. A very big company was able to automate like 50-60% of their paralegals' work because that was very routine and repetitive. L'Oreal has been spending lots of money in its entire consumer marketing value chain, if you will, using AI and eliminating like copy desk and things like that, where they typically have every little consumer promotion has to go through a copy desk, and they can eliminate hundreds of people that have to do that kind of stuff. People in financial services are trying to create alpha, at least on the buy side, like hedge funds and so on, almost always trying to tweak some algorithm and see if they can apply 10 more algorithms using AI. Really new case that I saw was programming a blockchain network using conversational AI. I don't know how much of all that is going to work predictably, and are we quite there? I don't think so, but people are attempting all different ways to take the human out, but time will tell.
Thank you for your beautiful presentation. I have a question. Could I interpret your presentation as saying that it's a safer bet to invest in power infrastructure rather than AI?
I would not say that way. What I would say is what started as AI software investment and a hype cycle around that very quickly pivoted, at least, into an infrastructure investment, because it just became very clear that you couldn't consume all of that AI software at scale without scaled infrastructure. So these things go cyclical. I think there'll be a group of people that will continue to invest in software, and there'll be like big investors that will invest in infrastructure.
Thank you for your comments today. When you look at companies from an investment perspective that are not hyperscalers or the AI software companies, but sort of more traditional Fortune 100s, what are the characteristics you look for about how they're adopting AI. You know, obviously marketing and finance and HR, sort of general functions, there's a lot of tools.
Yeah.
But how do you identify sort of best-in-class operators adopting AI among those very large players?
Yeah, I mean, at the moment, I would say at least my awareness comes from being on a couple customer advisory board of the smaller companies. Is it all 100% true? I don't know. It is probably a sample of like 10 or 12 across financial services, healthcare, and so on. What I see is like in the healthcare ecosystem, as an example, they're definitely attempting to use AI to create synthetic data and then synthetic data to do a lot of trials, which otherwise would be very difficult to do. And then there are people obviously working through the regulatory bodies to make sure that all this is already safe. Now, in insurance industry, a lot of rules have already been written pre-AI. So it is possible to sort of import those rules, if you will, into AI. I have not seen anybody start to use, AI-based underwriting, right? I mean, nobody would trust that. Nobody would just underwrite using AI. Call center, chatbot, yes, plenty of companies are scaling with chatbot. Plenty of companies are using it for, text chat. Like if you are like a United Healthcare and you get like 600 million claims a year, some form of auto response is happening using AI. Financial services, I already talked about that. Legal, HR, PR, I see all of that. Now, when it comes to the core of a company, so let's take telecom, and if you're talking about network applications, or if you're talking about financial services and you're talking about managing the risk of the business, those are things people are attempting to do it themselves because that's not something that they're looking for some startup to do for them. Nobody expects that, like, a bunch of people in Silicon Valley know everything about everything in the world. So they want to do that themselves. Then you're into this question of talent. You don't have the talent, you don't have the infrastructure, you don't know what kind of infrastructure is quite optimal for you. That's where they start to play with all these GPU as a service for infrastructure. There's still some gaps. Like there's gaps even in the NVIDIA's security ecosystem to make sure that you truly have like an AI-like firewall. There is still no guarantees that data will not get leaked into the model, even though people say it. Only Microsoft gives you 100% at least indemnification. The rest of them cannot afford it. So there's still gaps for enterprise. I mean, those kind of tools need to be created to make it easier for enterprise to go build software themselves.
Thank you. I believe you mentioned a lot about the infrastructure costs and investments around there and maybe bottlenecks and, say, resource concerns. A little bit antithetical to what we've been talking about, do you see any human resource concerns with a physical build out of that scale of physical assets?
Yes.
Like fiber,
Yes, plenty. In fact, there's two companies that are going to talk to me about wanting some money to grow their company and their business. There's a tremendous shortage of skills, people who can do mechanical fittings and electrical fittings. Like if you haven't built this much at any one point in time in the recent past, we're not going to just find skilled labor that can do all of these things. And then there are people creating classes or education material that will teach you how to do these things so that you can quickly, become like an apprentice to going and doing the job itself. Then there are people thinking through, can they create like modular something, a piece of a modular structure, not modular software, but I'm talking about like, the hard asset modules, if you will, and then you can maybe piece them, not like a Lego, but using a Lego analogy. So there's companies in Europe that are attempting those kind of things. There's an extreme labor shortage in Northern Europe where all this is getting built because that's where they have more power and water and hydro energy and so on. And in the US, I don't know about the exact shortage of labor yet because it just seems to me like, the mad rush is in the form of hyperscaler.
Thank you for a very insightful presentation. I'm just curious, with this challenge you presented from an infrastructure perspective, how is quantum computing being looked at in that light? And is it, like, and even from an investment perspective or accelerating research as a potential solution for this?
So as a firm, we have been doing very small venture investments in quantum. Every time you talk to somebody about when it'll be ready, it seems like the answer is 5 to 10 years. And it's been 5 to 10 years for quite some time now. And there's like 3 or 4 companies that I have been tracking. I'm not trying to say that's the only companies that I feel like have taken a few $100 million already, and are basically saying they're backward compatible with silicon, so that way all of the systems that have been built using silicon can be, like, forward managed with quantum kind of thing. But even they will say it's 5 years away, because most of them haven't proven even like something very small. Now, I think if I start to think about, like, right now, even as you find land and power, right, most of the pressure is in, like, Northern Virginia, Atlanta, and Texas and New York and so on. They want it close to where the big companies are, or close to where the traditional data centers or the tier 2 clouds used to be. So the bigger question is, what happens if you just find power that's like, I don't know, 3 power locations that are 100 miles apart, right? Then all of a sudden, latency becomes very important, bandwidth becomes extremely important. You can solve the bandwidth problem, but latency problem is super hard to solve for unless you have some new layer 1 technology that is above and beyond what is available in the marketplace today. So I don't know if quantum can help. No idea. That's what probably this group might be working on. I have no idea.
Thank you for your presentations. Very interesting. One question that I have is, especially in the emergence of generative AI, many companies started, I want to use it. But then there is companies themselves create these guardrails that limit the use of this technology for safety reasons and so forth. So in the data that you present, how much of those guardrails are represented from your point of view?
In the data that I presented, there is no separation of enterprise guardrails at all. Myself, I started to look at it from the top first, meaning work with startups. In fact, I advise a responsible AI company. I advise a few others. And everybody was rushing to the enterprise. And having come from the enterprise for like 25 plus years, it became very clear after about 6, 7, 8, 9 months, first 9 months after, November 2022, enterprises all used, quote unquote, innovation money. So they were just allowing every use case and every vendor and every consultant. I mean, McKinsey brought you 100 pages, BCG brought you 100 pages, Deloitte brought you, all of them were learning to, but they all brought you 200 pages of documents too, right? And every company was using innovation fund, quote unquote, doing 5 million here, 10 million here, whatever. But very quickly they realized that this POC is suddenly not scalable like that at all. So what you do in a lab for, let's say, 3 users, so if I'm somebody like Verizon where I worked at, I have 40,000 call center agents. The technology for 40,000 call center agents who get at least, even if you say they answer, I don't know, maybe 15 calls an hour and work 8 hours a day. And now you think about inference and you start putting the numbers together and you get like a price tag from the hyperscalers, which is like, oh, wait a minute. What's the ROI on that now? Just for summarizing a call and a customer's intent and so on, am I going to pay that kind of a bill? And that's when people started to pull back.
So I loved seeing all the data that you presented, and to the extent that those forecasts are accurate, one of the things that stood out to me was that while the growth in AI workloads generally is massive, there's an interesting shift from training workloads to more inference workloads moving forward. And that makes intuitive sense, right? As
Yeah.
we shift from developing products to product adoption and scaling, that would certainly be consistent. I guess my question is the opportunity here really more about how to move inference to the edge completely and take it out of the data center, where you have the chance to sort of distribute the cost for operations away from these consolidated data centers? And can we therefore achieve maybe reduction in power needs and things like that?
People are looking at it, and some of the latest inference chipsets on the recent MLPerf have started to show significant reduction in the need for both power and compute and all of that. But the real question is, you do need continuous training and learning, right? Because if you're an enterprise, it's not sufficient to have trained like 2 days ago if you have transactions coming after that. For doing continuous training, you need some level of training. So there is a continuous training and continuous inferencing that will happen. And can you do one on the edge and one like away from the edge? I don't think anybody has tested all those models yet. I don't think even the technology is there to do it. Yeah.
Hi, thanks for the presentation. One of the things that struck me, not only your presentation, but some of the others, is that there seems to be a dissonance between the CapEx and OpEx nature of what we're doing or where we're headed, with the cycles being so short. As you move away from the underlying infrastructure, like the power infrastructure for the data center, and you go into what goes into the data center, you start to head away from durables to consumables.
Yeah.
For instance, like the GPUs.
Yeah.
And then as you head for the software, it becomes increasingly consumable. So how is the dissonance between those two sort of behaviors going to work out, or where do you see the prognosis for that?
It's actually a very tough problem. In fact, there's one company that we're working with that wants both equity as well as debt. But in order to underwrite that debt, even they do not know how to sort of offer the collateral of the GPU. If you want to do GPU as a service, if GPU was a 5-year thing, it's one matter. But there's a new version of GPU coming every year. And so what's the shelf life of the GPU that you procured this year if you're going to get another version of GPU next year? And how do you offer that as a service? Are you going to have to write that off, or you have shelf life for 6 years? Because all previous colo models were based upon 6 years, and if it's like mission critical, maybe 4, but less than that, I don't think there is a model. And so it is a bit of a, yes, it's more than a cognitive dissonance. It's like, I think there is more risk being taken, and that is part of the reason why at least our firm has not made as many investments. And I know on the investment team, there is a big group of people that all scream like, look at the whole world is making trillions of investments and we haven't made even our fair share kind of thing. And it's because our investment committee is still a little more conservative about these matters, and the loan to value is important and all of that.
And the parallel with the environmental impact.
Yeah.
Where do all those obsolete GPUs go?
Obsolete GPUs, I have no idea, but beyond that, all the companies that have promised to be net zero by various amounts of time, I'm not sure that they can be anywhere close to net zero with the kind of power that is being consumed in the data centers.
The obsolete GPUs probably come to college campuses, but
So looking far ahead, right, 10 years from now, and power consumption and renewable energy sources, right? So how do you see investing in, like, we're gonna need 1 gigawatt, 10 gigawatt data centers eventually, right? So how do you see investing into renewable energy sources, and what do you see basically playing out in the field of energy? Because, you know, we're now 10 years ahead of, you know, like, we're gonna need this much. Now we need to start building a nuclear plants, right, for this data center or something.
So I'm hoping that you all will figure out, if it's 10 years, can you make like thermonuclear fusion available? Can you make nuclear plants easy and, you know, I don't know. That's the kind of investment. I know there are 2 nuclear plant investments that Bill Gates has made, and Sandia Labs says it's 10 years from thermonuclear fusion, which is I don't know, 10 years, when people say it's 10 years away, I don't know if it's 10 years away or it's just 10 years today and then it's another 10 years, you know.
From the perspective of the limits of renewable energy, right? So if you
Yeah.
find land next to renewable energy that can only power 10 megawatts.
Yeah, that can maybe do 50.
Yeah.
Yeah, and then after that it becomes really hard, and then the next one is at least a few miles away, at least.
Exactly.
Yeah.
So that's a huge.
Yeah, maybe that's the university opportunity for what happens 10 years from now.
Awesome. Radhika, I'm going to take the last question.
Yeah.
So one of the takeaways from your talk is the access to hardware is only going to grow or it's going to be limited, right, because of all these capital markets. What do you advise nonprofits and universities to do who need access to GPUs to do good in the world, to teach the workforce, et cetera, and so on and so forth? This is something that I hear about from faculty all the time in terms of limitations we have today. And looking at that chart, I'm nervous about that.
Yeah, I would say for experimentation, you have enough new clouds and the hyperscalers offering GPU as a service. And that GPU as a service, at least for innovation and lab purposes, I think they can, make it affordable. And if it is not affordable, I think they ought to. That should be something that we should be pressing on, the powers to make that happen, because otherwise innovation is not going to happen. But I think there's so much more that needs to be done in terms of new power discovery, as well as even the AI. I always question whether you really need a trillion parameter model. Can we not really make useful AI with a fraction of that? Because if that happens, then you also don't need this infrastructure. So,
Well,
thank you so much for
having me. Yeah, on that
having
note,
me.
let's thank our speaker.